Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 5th of September 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's kick off with a look at the overnight changes and price moves we need to be aware of. And really, yesterday was a story of weakness around the tracks. Not so much a case of dollar strength as we'll see, but weakness elsewhere, typified by things like cable, the pound falling by 0.72% against the US dollar, the Kiwi down by 0.75% against its US rival. Sharp losses for Canada and Mexico too, with the Canadian dollar down 1.41%. And the Mexican peso off by 1.86% even against its US rival. The biggest move though on the day, the South African rand down by a whopping 4.25% against the US currency, and we'll look at the reasons behind that a little bit later on in the video. Dollar index for its part, yes, it was better, trading at 95.38, up by around 0.35%, but that's a modest move given what we saw elsewhere. Okay, well, let's take a look at what's on the calendar then, events that may move the markets today. We've got a pretty busy calendar full of important data. We've already had GDP data for Q2 out of Australia that came out at 1:30 AM GMT. 15 minutes later we saw the Caixin Services PMI data for August, and we'll look at both of those numbers in a bit more detail momentarily. To come at 7:15 GMT we'll have Market Services PMI data for August out of Spain. And then 40 minutes later at 7:55 GMT we'll have both services and composite PMI data from market for Germany for the month of August. That's followed 5 minutes later by similar reads for the wider Eurozone. So as ever, there may be an opportunity to infer something from the German data and read that into the European data. 8:30 we'll see Market Services PMI data for the UK for August. Construction and manufacturing PMI data disappointed for the UK, and that helps to explain some of the recent moves in sterling. Let's see if services can show it any better. At 9:30, the first of the day's central bank speeches, this one from the ECB board member Prié. And then at 12:30 we cross the Atlantic for trade balance data out of the US for the month of July. At 1400, the Bank of Canada meets and announces its interest rate decision for September. Expectations are for no change. Market thinking rather that Canada might move in October. However, they have surprised us before. And then at 1900, the first of the day's Fed central banker speeches. Esther Williams is speaking at 1900. She followed on to the podium at 2000 hours by Neil Kashkari. Esther Williams is speaking again at 2015, and then FOMC member Bostic takes to the stand at 22:30. And if you're still in the market and still interested in data at 23:50 this evening, you can catch foreign investment in Japanese bonds and stocks for the week of August 31st. Okay then, breaking news and comment that's caught my eye. And first of all, South Africa has fallen into recession in Q2. GDP fell well short of forecasts, and the rand slumped versus the US dollar and other currencies as we saw earlier. Meanwhile, Q2 GDP data in Australia beat forecasts on both a quarter-on-quarter basis and a year-on-year measure. And the year-on-year beat was particularly impressive at 3.4% versus forecasts of 2.8%. Obviously, GDP is a backward-looking indicator or metric. However, that is an impressive beat, and I think that should bolster the case for the Aussie dollar bounce. Meanwhile, China's Caixin Services PMI for August missed expectations at 51.5 versus expected reads of 52.7, and moreover the figure deviated from the recent official numbers, just as the manufacturing PMI data had done before it. So I think that's a warning signal there of sorts. Not entirely sure what it means, but I think keep your eye out for a China slowdown basically. Okay then, food for thoughts, something to take away with you into the trading day and beyond. Why not think about this? Developed markets have been in a recovery or expansion mode for the last 8 years or more. And one measure of the health of this recovery could be the level of unemployment now versus pre-crisis levels, which is what we can see in the chart opposite. And the chart taken from the OECD via the World Economic Forum shows a selection of developed and developing countries, and the current rates of unemployment, at least rates of unemployment as of the end of 2017 in blue, versus rates of unemployment in those same nations in 2006 prior to the financial crisis and the Great Recession. So this is a very interesting chart and one that's well worth studying at your leisure. Okay, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative and do read this risk warning thoroughly. Thank you for your time.